To keep yourself updated, subscribe to Indigo Learn and click the bell icon and download our app OneFin to start learning on the go.
Hello, my dear students. A very good evening to one and all. So I welcome you all to the Indigo Learn channel, wherein today we are going to spend some good time on discussion about a lot of interesting topics in our syllabus, especially with respect to our cainter indirect tax loss. That is a component of your GST, which is worth for about 40 marks in the examination. And I'm sure everybody knows very clearly here that is this topic has got good amount of importance both from examination standpoint and also from a practical standpoint for two interesting reasons. Reason number one being very clear that it is worth for about 40 marks in the examination, and reason number two being very clear that CA final level you have got direct taxes paper for 100 marks, indirect tax paper for 100 marks. So it is important that at inter level you get that great element of knowledge so that in final things become more smoother and easier. So today, being that we are very close to the exams of May 2023, today we'll spend some very good time on revising the interesting topics of GST, and so that we will clarify if any of your doubts what you have got, and will become perfect with our preparation, and this will aid for you to score some very good marks in the examination. So are we ready, my dear friends? So let's start off, guys. Come on. So without delay, let's start our discussion. I will proceed, guys. Let's make optimum utilization of the time what you have got, guys. Come on, my dear friends. Let's begin, guys. Come on. So friends, in CA when we talk about GST, which is worth for about 40 marks in our syllabus, we know the fundamental point very clear that taxation paper will come in exam both descriptive type and also for multiple choice questions. And as on today's date, there is a good thing going on, that is we don't have any negative marking for MCQs. So all said and done, I keep finding some students who just try to mug up MCQs and just try to remember the MCQs. Friends, please remember, MCQs are not something which have to be mugged up. MCQs are something which actually come in the exam, and we just have a clarity of thought on the concept, then we can definitely tackle that MCQs. MCQs are not something which needs to be mugged up. So if there is a clarity of thought on the concept, we can definitely answer that MCQs, guys. So without wasting our time, let's proceed to discussion about some interesting aspects of GST. We'll revise them, and during the discussion, we'll also talk about the latest amendments which have come up for May 23 exam. I'm sure most of you listening to the lecture now knows very clearly that a lot of interesting amendments have come for May 23 exam, which students need to have a very good clarity of thought. Already at Indigo Learn YouTube channel, we posted amendments video, but today I'll also touch upon the important amendments where there is a high probability and prospect that question may come in the examination. So let's proceed. So at cainter GST level, my dear friends, we have got some interesting topics like basic concepts. We have got the concept of what is supply. We have got the concept of registration under GST law. We have got the concept of time of supply. We have got value of supply. And we also have important discussion known as charge of GST. And we have a brilliant topic known as exemptions. And apart from these topics, my dear friends, we have got some procedural based topics like tax invoice, credit note, debit notes, and the concept of e-way bill. And we have got an interesting topic called returns. So like this, we have got some procedural based topic also where there is a probability that question may trigger in the examination. So these are the topics what we have in our syllabus, like GST in India, introduction, supply under GST, charge of GST, exemptions, time of supply, value of supply, and of course a very interesting topic called input tax credit, which comes in exam almost every time for about 6 to 7 marks, almost every time in the examination. Then we have got topic of registration, tax invoice, credit note, debit note, payment of tax, and then finally returns. So topic by topic, we'll discuss some important elements and proceed, my dear friends. So first topic, my dear friends, that is GST in India introduction. First of all, we would have heard very clearly wherever you would have taken coaching, whatever it category you belong to. Let's not spend time on that, which category you belong to. First and fundamental important point, when we talk about GST, we know the basic concept that GST stands for Goods and Services Tax. And India adopted GST on which date, my dear friends? 1st of July 2017. And it is not that India has invented GST, a new kind of system of tax has been introduced by India. It's nothing like that. France was the first country to introduce GST way back in the year 1954. 1954. India introduced GST only in 2017, my dear friends. In fact, the idea of GST started in India in the year 2000. But it took almost some sweet time to bring GST into India, and he brought it on 1st of July 2017. And here, one interesting point to be noted is that in order to bring GST into India, there was a need to amend the Constitution of India. As we all know that Constitution is the supreme law of India, where all other laws in India have derived power from the Constitution to impose their taxes. So now the mother of all the laws and the supreme law in India, that is a Constitution, there was a need to amend the Constitution in 2016, and they brought Constitution 122nd Amendment Bill. Constitution, which bill, my dear friends? Constitution 122nd Amendment Bill. And this Constitution 122nd Amendment Bill has become Constitution 101st Amendment Act. Now don't get it out. Sir, why, how 122nd has become 101? The logic is very simple. It's not necessary that every bill will become act. I'm sure you know the basic fundamental point that any bill is approved by Lok Sabha and Rajya Sabha, then that bill will be signed by the president. Only then the bill will become act. So it is very clear that it is not necessary that every time whatever is there in the bill should be there in the act. It is highly possible that what is there in the bill may not be there in the act because Lok Sabha or Rajya Sabha would not have passed it, or maybe because there is a probability that, or maybe because there is also a probability that Lok Sabha, Rajya Sabha has approved it, but President has not approved it. So whatever category it is, my dear friends, so it's not necessary that whatever is there in the bill should be there in the act. So Constitution 122nd Amendment Bill has become Constitution 101st Amendment Act. Getting clarity, my dear friends? Everyone, sir, very brilliant point, my dear friends. Now listen. I'm sure you guys know that even though GST has come, still there is income tax in India because GST has not replaced Indian income tax law. But there are multiple indirect tax laws which have been replaced by introduction of GST. Now let's look at what are all the multiple indirect taxes which have been replaced by GST law. If you look at, my dear friends, multiple indirect tax laws of center, multiple indirect tax laws of state have been conglomerated and they have been subsumed into the GST law. In exam, a 2 marks question can come. What are all the taxes that have been subsumed into GST? Come on, guys. Center, number 1. There was something known as excise duty. Excise duty stands for a duty levied on manufacture or production of goods. So prior to GST, whenever there is a manufacture production of goods, excise duty was levied. Now this excise duty has been replaced by GST law. But on certain and one point, let me tell you here, that is, even though excise duty has been replaced by GST law, even today, there is still excise duty on some products like alcoholic liquor for human consumption, petroleum crude, high-speed diesel, motor spirit, natural gas, aviation turbine fuel. I'll tell the reason why very soon in 2 minutes. But apart from that, my dear friends, there is one product on which the central excise duty also is levied, GST also is levied. That is nothing but tobacco products. In case of tobacco product, both earlier central excise duty and also GST, both are being levied when it comes to tobacco products. So what was excise duty levied for? Excise duty was levied for manufacture or production of goods. Second, service tax. Service tax was basically levied for providing or rendering of services. Even that's gone now. There is no more a concept of service tax. Next, CST, which stands for Central Sales Tax, which was levied on interstate sale of goods. I repeat again, CST was levied on interstate sale of goods. Got it, guys? Now, an interesting point I'll tell you here. Listen very clearly, sir. Prior to GST law, on sale of goods, there was something called VAT and CST. For intrastate sale of goods, there was VAT. For intrastate sale of goods, there was CST. But for providing services, there was service tax. So for goods, there was VAT, there was CST. For service, there was service tax. But under GST law, they removed VAT, they removed CST, they removed service tax. It is only one tax, that is GST. That's the reason why they gave so many slogans of one nation, one tax, one nation, one tax. So first point, my dear friends, come on. Excise duty, service tax, CST, then surcharge and cess related to above taxes. Obviously, when the main tax is only gone, there is no question of surcharge and cess related to those taxes. Excuse me. When the main tax is only gone, there is no question of surcharge and cess related to those taxes. Now, when we talk about state level, my dear friends, first and fundamentally an important point called VAT. VAT stands for value added tax, which was levied on intrastate sale of goods. VAT was levied on intrastate sale of goods. CST was levied on interstate sale of goods. Come on, guys. VAT was levied on what? VAT was levied on intrastate sale of goods. CST was levied on interstate sale of goods. And VAT was levied by state government and was also collected by state government. Whereas when it comes to CST, CST was levied by central government but collected by state government. I repeat once again, guys, CST was levied by central government and collected by state government. But VAT was not like that. VAT was levied by state and was also collected by state. So state level taxes, VAT. Next one. Luxury tax. Star hotels used to collect luxury tax. That is also gone now. Third one. Entertainment tax, which was levied when we go to movies. Next one, tax on advertisement. There was something called advertisement tax. Even that was levied, my dear friends. I hope you are getting clarity, guys. So VAT, luxury tax, entertainment tax, tax on advertisement, octroi, which was also called as entry tax, which was imposed by some states. So finally, last line, surcharge and cess related to above taxes. So all these taxes have been subsumed under GST law, my dear friends. So there is a probability that a question may come in the exam for 2 marks where they will ask what are the taxes that have been subsumed in GST. So many times question has come, list the central and state level taxes that have been subsumed under GST. And some crazy students keep writing income tax. Guys, please don't do that fundamental wrong mistake, guys. It's very clear that GST is a replication of various multiple indirect taxes which were there in India. Clear? And in exam, don't even write customs duty. Customs duty levied on imports and exports, that is still there alive. That is still there. Customs duty is still there, my dear friends. And at CA final level, you have got syllabus of indirect tax laws, which is GST and customs. So never ever tell that customs is gone. Customs is still there. Only these are the taxes which I presented in front of you. Only these taxes have been replaced by GST. I hope you are clear, my dear friends. That's it. Come on. And the definition of GST, what they gave in the law very clearly is that GST is a tax on. GST is a tax on supply of all goods or services or both, except alcoholic liquor for human consumption. I repeat again, my dear friends, Come on, what is the language I wrote? GST is a tax on supply of all goods or services or both, except what, my dear friends? Except alcoholic liquor for human consumption. So guys, come on. GST is a tax on what? GST is a tax on supply of all goods or services or both, except alcohol liquor for human consumption. So you have to understand the basic fundamental point very clearly is that alcoholic liquor for human consumption has been permanently kept outside GST. So in future, if they want to tax alcohol liquor for human consumption, they have to bring amendment in the law. And the fundamental reason they kept it outside is all political reasons, where state governments clearly told that we will support GST only if there is no GST on alcohol and liquor for human consumption. Clear, my dear friends? Come on. So if they ask definition in GST, what is the answer we are going to write? GST is a tax on supply of all goods or services or both, except alcohol, liquor for human consumption. Apart from this, my dear friends, there are 5 petroleum products which have been temporarily kept outside GST, my dear friends. That is petroleum crude. Next one, high-speed diesel. Come on, what is the first one? Petroleum crude, high-speed diesel, motor spirit. Motor spirit is nothing but petrol, guys. Petroleum crude, high-speed diesel, motor spirit, natural gas, and finally, aviation turbine fuel. I repeat again, my dear friends, what are the 5 petroleum products? 5 petroleum products are petroleum crude, high-speed diesel, motor spirit, natural gas, aviation turbine fuel. These are the 5 petroleum products which have been temporarily kept outside GST. Come on, my dear friends, getting clarity, everybody? Reply, my dear friends. Yes, so come on. So what are the 5 petroleum products? Petroleum crude, high-speed diesel, motor spirit, natural gas, aviation turbine fuel. These are the 5 petroleum products which have been temporarily kept outside the GST law. So finally, one last point to talk in the first topic which I want to revise, that is article. So before that, let me tell 2 things. So when I talk about this word supply, my dear friends, there are 2 types of supply called intrastate supply. Other one, interstate supply. Never ever in GST law use the word sale of goods, providing service, rendering service. Never use that language. In GST law, there is only one fantastic word called supply. And we have divided supply into 2 types, intrastate supply, interstate supply. And in case of intrastate supply, my dear friends, CGST and SGST is levied. I'm sure everybody knows this fundamental point. So if the rate of GST is 18%, we will charge 9% and 9%. We will never ever do 10 and 8. It is always 9 and 9. Here, my dear friends, intrastate, what will you charge? CGST and SGST. In case of interstate, my dear friends, in case of interstate, IGST is levied. Getting clarity, everyone? So in case of intrastate, what is levied? CGST and SGST. Interstate, what is levied? IGST is levied. Now, one basic point I'll tell you here, this CGST part, central will take, SGST part, state will take. But this IGST part is taken by central government and then it is subsequently shared with state government. But fundamentally, money is first taken by central government only. Then they will share with the state government. Are we getting clarity on this point, everybody? Yes, guys? Brilliant. Fantastic. So let's proceed. One last point to talk in this basic concepts, guys. Then I'll proceed to next discussion. That is, there is something called Article 279A, which talks about GST Council. That's why we have heard of something called GST Council. The concept of GST Council is very interesting, my dear friends. Any change or any decision related to GST is taken by central government on the recommendations of GST Council. So in fact, who will give recommendations is that GST Council will give recommendations to central government. And based on that recommendations, central government will take some decisions. Now, who are there in this GST Council? That is important. GST Council is a conglomeration of center members and also members from state. And from center side, there are two members. Number one, Union Finance Minister. Number two, Minister of State for Finance. Only two members, my dear friends. Come on, who are two members? Union Finance Minister. Second one, Minister of State for Finance. And these two together, they have got 1/3 weighted votes. That means if these two tell yes, that means 1/3 is done. 1/3 is done. Now, how much is it? You have to take a decision from state side. Never tell that word. Every state representative. So one person from every state will come. Getting my point, everybody? And all states put together, they have got 2/3 weighted votes. I repeat again, my dear friends. Listen very clearly. Come on. Center, only two members are there. And both together, they have got 1/3 weighted vote. And all state representatives together. What is that line I told, sir? All state representatives together, they have got 2/3 weighted vote. And the interesting fact, which we should know very clearly, is that to pass a resolution, there should be 3/4 majority. This is the beauty of GST law. That is the reason why in India, we adopted Canada model of GST, which is technically called as dual GST model. Dual GST model is a case where center and state together will levy and collect the taxes. And that is a fundamental reason why there was a need to amend the constitution, my dear friends. I repeat once again, that is the fundamental reason why there was a need to amend the constitution in 2016. Because prior to 2016, there were some taxes levied only by central government. There were some indirect taxes levied only by state government. But there was never a tax in India. I repeat again, there was never a tax in India levied by center and state together. For the first time in the history of India, in 2017, they brought one tax levied by center and state together. And that is the reason why there was a need to amend the constitution. And they brought Constitution 122nd Amendment Bill 2016, which has subsequently become Constitution 101st Amendment Act. Getting my point, everybody? And in fact, bill was actually brought way back in 2014 only, but it took 2 years' time to become the act. And the bill number was 122, act number is 101. And the reason, if they ask in the exam for 2 marks, what was the need to amend the constitution? The fundamental reason is that in order to give dual powers to center and state, there was a need to amend the constitution. And they brought Constitution 122nd Amendment Bill, which has subsequently become Constitution 101st Amendment Act. So friends, in India, what kind of model is adopted, my dear friends? We adopted a model called dual GST model, where center and state together will levy and collect the taxes. And center has got a weight of 1/3 weighted votes. And all states together, they have got a weight of 2/3 weighted vote. But to pass a resolution, there should be 3/4 majority. That means the concept is very clear that center alone or state alone cannot independently take any decision, because center weight is 1/3, state weight is 2/3, but to pass resolution, we want 3/4 majority. So center alone, state alone, independently cannot take any decision. In fact, that is the beauty of this word called dual GST model. Come on, friends. So in India, what kind of model is adopted for GST? That model is called dual GST model. And moreover, my dear friends, GST is a destination-based consumption tax. And the reason we say destination-based consumption tax is because tax will go to that state. I repeat again, the reason we say GST is a destination-based consumption tax is because tax will go to that state. Tax will go to that state where goods or services are consumed. Tax will go to that state where goods or services are consumed. This is not origin-based tax model. This is destination-based model. So tax will go to that state where goods or services are consumed. So these are the various interesting points in the first topic of basic concepts. I'm sure we all got good clarity, my dear friends. Kindly please respond, my dear friends. Yes. Now, without delay, my dear friends, let's move forward to the next interesting discussion, that is about the concept of supply. Something interesting and important, high probability that question will come in the examination. Ready? Yes. This word supply is defined by a brilliant section called Section 7. Supply is defined by which section? Section 7 deals with the concept of supply. And we are talking about Section 7 of CGST Act. In our syllabus, we are not concerned with IGST Act because IGST Act is there only in CA final level. But at CA inter level, we have got more of discussion only with respect to CGST Act. So let's talk about Section 7, supply, my dear friends. Clear? Now, this Section 7 supply is divided into 7.1, 7.2. In fact, in between we have got something called 7.1a and 7.3. And 7.1 is further divided into 7.1a, 7.1b, 7.1c. It is important that we understand these points very clearly. Extremely powerful points. Let's discuss very much in detail, my dear friends. High probability that question will come in the exam. Come on, let's proceed. Now, what is section 7.1a? 7.1a says supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease, or disposal made or agreed to be made for a consideration by a person in course or furtherance of business. Come on, guys, what the language I wrote? Supply includes what? Supply includes all forms of supply of goods. Goods cover what? Every kind of mobile property other than money and securities. I repeat again, goods cover every kind of mobile property other than money and securities. Money and securities is not covered in definition of goods. Come on, supply includes what? All forms of supply of goods or services or both. What is services? Services means anything other than goods, money and securities. So this money and securities means what? Shares, debentures, bonds, everything. This money and securities is not covered in goods. It is not covered in services. That is the reason why practically when we do trading in buying and selling of shares, securities, debentures, bonds, units, we never pay GST. But the share broker is required to pay GST because he is only an intermediary. He is giving advice on what shares to be procured, for which he will charge commission. That transaction will become a supply. In that there is no doubt. Come on, guys. Supply includes what? All forms of supply of goods or services or both, such as sale, transfer, barter, exchange, barter exchange difference is that in barter, there is no monetary consideration. But in exchange, there is some monetary consideration involved. So such as what? Sale, transfer, barter, exchange, license, rental, lease. Lease is for long term, rental is for short term. Rental, lease, or disposal made or agreed to be made. That means it is done or yet to be done. For what? Consideration. And consideration could be in monetary form or it could be in non-monetary form. By a person. Person could be individual, HUF, companies, firm, AOP, BOI, AJP, government. Everybody is covered in definition of person. And that too, this is done in the course or furtherance of business. In the course of business means in the activity of business. Furtherance of business is something like expansion of business. So come on, my dear friends, let's revise once. Supply includes what? All forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease, or disposal made or agreed to be made for consideration by a person in the course of furtherance of business. So let me ask you one question, guys. See, for example, you logged in somewhere and you wanted to buy Shiva Teja's classes. You made the payment and purchased Shiva Teja's classes. Now tell me, is it a supply from my point of view? Definitely answer is yes, because there is supply of service for a consideration. But when you're watching this YouTube lecture, tell me guys, is it a supply? Definitely answer is no, because there is no consideration in this particular transaction. You're getting my point, everyone? So if something is coming free, there is no consideration for that. It is not a supply. So for example, when we go to Pani Puri stall and we are eating that Golgappa, 20 rupees we paid, he gave 5 puris. That 5 puris is a supply. But last extra 1 puri he gives, that is not a supply. Because for that, there is no additional consideration what we paid. That's coming out free. You're getting my point, everyone? Good, guys, come on. Supply includes what? Supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease, or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. Clear? Done. Next, my dear friends. 7.1b. Which section? 7.1b. 7.1b talks about import of services for a consideration. We imported what? Services. That means what? From outside India, we're taking some service. And I'm sure we all know that the transaction is covered under reverse charge mechanism. If supplier is outside India, receiver is in India. If supplier is outside India and receiver is in India, the transaction will be covered under a reverse charge mechanism. Import of services for a consideration, whether or not in course or furtherance of business. So whether we imported for business use or whether we imported for personal use, still it is regarded as supply, my dear friends. So what is that language we have just discussed? Import of what? Import of services. Import of services for a consideration, whether or not in the course or furtherance of business. So whether imported for business use or imported for personal use, still it becomes a supply. You're getting my point, everybody? So for example, let us say one of my friend is an architect sitting in Singapore. I called him one day and I told him, boss, I want you to give one fantastic design for my house. And I asked him, how much you want me to pay? He told, pay me 3 lakhs. I paid 3 lakhs and I imported some service. Now tell me, did I import such service for business use or personal use? I imported for personal use, but still the transaction is regarded as supply. The reason being very clear that law told import of services for a consideration, whether or not in the course or furtherance of business. So imported for business use or imported for personal use, still it is regarded as supply. Getting my point, everybody? So what is section 7.1a? 7.1a says what? Supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease, or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. And what is section 7.1b? Import of services for a consideration whether or not in the course or furtherance of business. Next point, guys. 7.1c, my dear friends, transactions which are regarded as supply. Transactions which are regarded as supply even though there is no consideration. I repeat again what the language I just wrote, sir. Even though there is no consideration, still it is regarded as supply. Very, very important point. High probability that question will come in the exam. First point. Listen, my dear friends. Permanent transfer. Permanent what? Transfer or disposal of business asset on which ITC is claimed. Come on, my friend, what is the language I wrote? Permanent transfer or a disposal of business asset on which ITC is claimed. So, for example, let us say Shiva Teja has got one cell phone with him, which I have taken for business purpose, and it is there in my balance sheet, on which I have taken input tax credit also. But one fine day, I gave that cell phone to my friend for free of cost. Now, law is telling, even though you go give it for free of cost, still it is regarded as supply, because it is transfer of a business asset on which you have claimed input tax credits. Getting my point, everybody? Permanent transfer or disposal of business asset on which input tax credit is claimed. I'm sure everybody is clear with this point, all of us. Second point, my dear friends. Supplies between distinct or related persons. I repeat again, what is the language I wrote? Supplies between distinct or related persons in course or furtherance of business. Now, let me tell you an interesting point here. Distinct person is nothing but PAN is same, but GST number is different. PAN is same, but GST number is different. The reason being very clear that in registration chapter, you would have heard very clearly that under GST law, registration is to be taken state-wise, but not on pan-India basis. For every state, you have to take separate registration. You have no option at all. You're getting my point, everybody? So, for example, my dear friends, if you talk about Reliance, in whichever states they have got business, they have to register in every state. So, for example, if there is a company which has got business in Telangana, Maharashtra, and also in Gujarat, so in all the three states, they should always take separate registration. So, what is that line? Supply between what? Distinct or related persons in the course or furtherance of business. And in case of family, related persons cover spouse and children. And parents, brothers, sisters, only if they are dependent, wholly or mainly. I repeat again, spouse and children are always covered. Parents, brothers, sisters are covered only if they are dependent, wholly or mainly. If they are not dependent, then they are not covered. Clear? Good. So, what first point we done? Permanent transfer or disposal of business asset on which ITC is claimed. Second point, supply between distinct or related persons in the course or furtherance of business. Third point, transfer of goods from principal to agent, and vice versa. Nothing but concern or concerning. You would have heard it, my dear friends, principal to agent. But let me tell you an interesting point here, highlight an interesting point. I'll put one star mark. That is, it is taxable only if agent subsequently issues invoice to customer in his own name. In his what name, my dear friends? Own name. That means what I'm trying to tell you is that the transaction between principal to agent is taxable or not depends upon how agent is given to customer. I repeat again, my dear friends. If goods are transferred from principal to agent, that transaction is taxable only if agent is supplying goods to the customer. Only if what? Agent is supplying goods to the customer in his own name. So if agent is supplying goods to customer in his own name, only then the transaction between principal to agent is taxable. You getting my point, everybody? All of us? Come on, friends. What the first point we have done? Come on, friends. Permanent transfer of what? Permanent transfer or a disposal of what? Business asset on which what is claimed? ITC is claimed. Second, what is second point? Come on. Supply between what? Distinct or related persons in the course or furtherance of business. Third point. Transfer of goods from where? Principal to agent. Transfer of goods from principal to agent. So we're done with 3 points, my dear friends. So what the first point? Come on. First point is what? Permanent transfer disposal of business asset on which ITC is claimed. Second, supply between what? Distinct or related person in the course or furtherance of business. Third point, transfer of goods from principal to agent and vice versa. Now let's look at the last point, my dear friends. Import of services by a person from whom? From related person or any of his establishment. Any of his establishment outside India in course or furtherance of business. In course or furtherance of business. So these are the 4 points, my dear friends, where it is regarded as supply even though there is no consideration. So one student is asking one doubt online, sir, if supply is considered even though there is no consideration, how GST is computed? My dear friend, let me tell you, for the purpose of valuation, there are a lot of interesting valuation rules which you will learn in your CA final, where you will get to know how do we do the valuation in a case where there is no consideration. For that, there is something called Rule 28, Rule 29 and all, where we will learn about how do we do the valuation even though there is no consideration. Don't worry. I'm sure your doubt is answered. Good. So friends, there are 4 points which talk about transactions regarded as supply even though there is no consideration. First point is what? Permanent transfer or disposal of business asset on which ITC is claimed. Number 2, supply between distinct or related person in the course of furtherance of business. Number 3, transfer of goods from principal to agent or vice versa. Number 4, import of services by a person from related person or from any other establishment outside India in the course or furtherance of business. So that is the story of this interesting point in section 7.1, my dear friends. So we are done with 7.1a, 7.1b, 7.1c. Now, section 7.1a talks about what are regarded as goods, what are regarded as services. And only one major point to be noted here. That is, in order to call it as goods, there should be a transfer of title. Transfer of title. Either immediately or at future date. Future date classic example is hire purchase system, where ownership will pass on payment of last installment. Services means there is a transfer of right without transfer of title. So there is a transfer of right without transfer of title. We call it as service. We call it goods only if there is a transfer of right along with transfer of title, and the title may pass either immediately or it may pass at future dates. Getting clarity on this point, my dear friends? That's it. That is the story of section 7(1)(a). Now let me talk about something called section 7(2)(b), which talks about transactions which are neither supply of goods, nor supply of service. It is not supply of goods, it is not supply of service. That means what? If it is not supply of goods, if it is not supply of service, what does that mean, my dear friends? GST will not apply. First point is service by employee to employer. Employee to employer in the course of employment. That is a fundamental reason why practically salaried employees do not pay GST. Next. Services by court or tribunal established under any law for time being in force. Next. Service by MPs, MLAs or any public servant like Prime Minister, President, everybody. These all guys don't pay GST. So what the first one? Employee to employer in the course of employment, court or tribunal, MPs, MLAs or any public servant. Getting my point, my dear friends, everybody. All of us. Next one. Sale of land and building, except construction services. That means practically whatever builders we find who are constructing apartments or constructing commercial space and selling, they are liable to pay GST. But here there is one catch point to be noted. That catch point is that if the entire amount is received, I repeat once again, my dear friends, if the entire amount is received after issuance of occupancy certificate or completion certificate, then GST will not apply. Even if a single rupee is received prior to completion certificate, then definitely GST will apply. So imagine a case where Shiva Teja went to one builder who's constructing one apartment, and I booked one flat for 1 crore. For what value I booked? I booked one flat for 1 crore. When I booked the flat for 1 crore, I paid a consideration of 5 lakh prior to issue of completion certificate or occupancy certificate. In that case, GST will apply on the entire value of 1 crore. GST will not apply only in one case. That is, entire amount, 100% of amount is received after issuance of occupancy certificate or completion certificate. You're getting my point, everybody? So please understand that GST is a very practical subject and very, very important, both from examination standpoint and also from practical standpoint. And if you don't focus and don't listen now and don't get ready and gear up for the examination, after examination, you have got a lot of time in your life to relax, enjoy, sleep, whatnot. So now it is very important that you guys are geared up for every minute, every hour, every second. You focus only on your success and only on your aim, nothing else. So concentrate, guys. Come on. So what the first point? Service by employee to employer in the course of employment, services by court or tribunal, service by MPs, MLAs or public servant, sale of land and building except construction services. Next point, my dear friends. Actionable claims. On actionable claims, there is no question of GST. An example for actionable claim is that right to participate in lottery, right to debtors, basically practical general sense we call unsecured debts. Actionable claim is an unsecured debt which can be enforced in the court of law. That's called actionable claim. Actionable claim other than betting, gambling, lottery. So on betting, gambling, lottery, GST will not apply. You're getting my point, my dear friends? On betting, gambling, lottery, GST will not apply. I hope we are clear with this point, everybody. So what the first point? Come on. Services by employee to employer in the course of employment. Next, court or tribunal, MPs, MLAs or any public servant, sale of land and building except construction services. Next point, actionable claims other than betting, gambling, lottery. Finally, last point, my dear friends, that is services of funeral, burial, crematorium, mortuary, including transportation of deceased. So what is that line, my dear friends? Actionable claims other than what? Betting, gambling, lottery. And after that, what is the last point we wrote? Service of what? Funeral, burial, crematorium, mortuary, including transportation of deceased. That is also not taxable because it is neither regarded as supply of goods nor regarded as supply of service. If it is not supply of goods, not supply of service, then there is no question of GST that will apply. Because always keep in mind, GST will apply only if the transaction is supply. If it is supply, then only GST will apply. That is why it is important to know what is the meaning of supply. Student is asking, sir, actionable claim GST is applicable. No, my dear friends. On actionable claim, GST will not apply because the point itself says actionable claim other than betting, gambling, lottery. So on betting, gambling, lottery, GST will apply. On any other actionable claim, GST will not apply. I'm sure your doubt is answered, my dear friend. Finally, the last point which I want to revise in this particular topic, my dear friends. Somebody is asking, sir, what is actionable claim? My dear friend, let me tell you, actionable claim is nothing but an unsecured debt which can be enforced in the court of law. So, for example, I gave a loan of 10 lakhs to someone. It is not a secured loan, but that person just sent a promissory note and that person is not repaying the loan to me. Now, using that promissory note, I can file a suit in the court of law. Now, when I'm filing a suit in the court of law, that promissory note, what I'm using to file a suit in the court of law will become an actionable claim, which is an unsecured debt which can be filed a suit in the court of law. So, in other words, a claim which can be actioned in the court of law is called actionable claim. Clear, my dear friend? Yes. Finally, let me talk about the last part of this topic, section 8, that is about supply. And in supply, two types of supply. That is nothing but composite supply and mixed supply. Composite supply is that supply where two or more supplies are naturally bundled and one of which is a principal supply. Classic example, when you go for hotel accommodation, morning they give complimentary breakfast. Sometimes when we go in, when we do a booking of a flight ticket, in the flight ticket they might give some snacks, or a bus ticket they might give some snacks. They are all called as composite supply, which are naturally bundled and one of which is a principal supply. Somebody asking one more doubt. So can you give any practical example for actionable claim? That is right to participate in lottery. Lottery ticket. Lottery ticket is nothing but an actionable claim. Next point. So composite means naturally bundled and one of which is a principal supply. And mixed supply are those which are not naturally bundled. Example, assume for a second, there is a box of cashew, almonds and pista packed in one box. They are not naturally bundled like that. They are separately available also. And in that cashew, badam and pista, you cannot tell which one is more predominant. That's called as mixed supply. So they told in the law very clear, interesting point that composite supply is taxable at the rate of principal supply. I repeat again, my dear friends, composite supply is taxable at the rate of principal supply, whereas mixed supply is taxable at highest rate. So in that box of cashew, almonds and pista, whichever tax rate is highest, that tax rate will apply in case of mixed supply. So composite supply is that supply which is naturally bundled and one of which is a principal supply. And composite supply is taxable at the rate of principal supply, whereas mixed supply are those which are not naturally bundled. And what will happen is that in mixed supply, it is taxable at highest rate. So this is the end of story of this beautiful topic called supply. High probability that questions will come in the exam. So I definitely wanted to discuss and revise a lot of important topics, my dear friends. The fundamental agenda of this is only to ensure that we spend time on revision of various important topics of GST. I hope this topic is very clear for all of us, guys. Yes. Let me proceed. Now, my dear friends, let me talk about the next interesting topic known as time of supply. Come, what is that word, sir? Time of supply. Listen, time of supply is important because one interesting point, my dear friends. Generally, the due date for payment of tax is 20th of next month. I repeat again, generally, the due date for payment of tax is 20th of next month, and where we pay the tax by using one form called GSTR 3B, which is nothing but monthly return. GSTR 3B is a monthly return which we use it for making payment of tax. But however, there is one scheme called QRMP scheme, quarterly return monthly payment scheme, which is optional scheme. That too optional only for those whose turnover does not exceed 5 crores. In those cases, they pay tax on monthly basis, but they file the return on quarterly basis. Name only says quarterly return, monthly payment. So payment is done on monthly basis, return is filed on quarterly basis. But apart from that QRMP cases, general case, the due date for payment of taxes 20th of next month, that too we will pay at the time of filing monthly return in one form called GSTR 3B. Now, listen very clearly, sir. Imagine a case where Shiva Teja has given service to a client. Now let us say service is given on 10th June 23. Okay, my dear friends. And I gave invoice to the client on 6th July 23. Client has made the payment on 5th August 23. Now, you observe carefully, if you ignore the date and see the months, service is done in June, invoice is given in July, but payment is received in August. Now, tell me, guys, if I consider this date, the answer will become 20th July. If I consider this date, it will become 20th August. If I consider this date, it will become 20th September. 20th September. Now, question is all about which date is required to be considered. Now, which date is required to be considered? That date is nothing but which is given by time of supply. So, time of supply doesn't tell what is the due date for payment of tax. Due date for payment of tax is very clearly 20th of next month. But when I say 20th of next month, 20th of which month? Next month means which month? That is given by time of supply. So, time of supply determines the trigger point for payment of tax. You getting my point, everybody, sir? Now listen. We have got section 12, time of supply in case of goods, and section 13, which talks about time of supply in case of services. Let's understand, come on. Now, my dear friends, in case of goods, there is a general rule. There is a general rule which says that time of supply is always date of invoice. I repeat again, time of supply is always what, my dear friends? Date of invoice. Now, what is the date of invoice? Date of invoice is nothing but actual date of invoice or last date when invoice is ought to have been issued under section 31, whichever is earlier. Come on, my friends, what is the language given in the law? They clearly told that date of invoice is nothing but actual date of invoice. That means that actually when invoice is given, or last date when invoice is ought to have been issued. That means when invoice was supposed to have been issued. Now, when invoice is supposed to have been issued, that is basically given by section 31, which says that in case where there is a movement of goods, on or before date of removal. I repeat again, on or before date of removal. And if there is a case, we are talking about no movement of goods, then they told in the law, issue the invoice on or before date of delivery or make available. Come on guys, what is the line we used? If there is a movement of goods on or before a date of delivery. I repeat again, there is movement of goods on or before date of removal. And if there is no movement of goods on or before a date of delivery or make available, that means it is made available to the recipient. So for example, my dear friends, assume for a second, there is a movement of goods. Removal is done on 6/4/22. And invoice is actually issued on 8/4/22. Then law is telling time of supply will become 6/4/22, because law clearly told time of supply is nothing but actual date of invoice or last date when invoice is ought to have been issued, whichever is earlier. So when you give or when you are supposed to give, whichever is earlier. And when you are supposed to give, if there is movement of goods on or before date of removal. If there is no movement of goods on or before date of delivery or make available. Getting my point, everybody? Chalo guys, if the movement of goods, what is the answer? On or before date of removal. No movement of goods on or before date of delivery or make available. So this is a story of general rule in case of goods. So in case of goods, general rule clearly says that time of supply is always date of invoice. And date of invoice is nothing but actual date of invoice or last date when invoice is ought to have been issued, whichever is earlier. So if I have to give an example for what is the case where there is no movement of goods. No movement of goods example could be, for example, sir, let us say I am selling furniture to you and I am not moving the furniture to your place, but you actually came to my office and occupied the furniture. So there is no physical movement of furniture. So in that case, we will see what? On or before the date of delivery or when it is made available to the recipient. I'm sure your doubt is answered, my dear friend. Yes. So the movement of goods, what is the answer? On or before date of removal. If there's no movement of goods, on or before date of delivery or make available. That is the story of general rule in case of goods, my dear friends. Now, in case of goods, which are covered under reverse charge mechanism, in fact, in our syllabus, we do not have what are the list of goods covered under RCM. But in our syllabus, we have got list of services covered under RCM. I'm sure we all know the major points, something like services by GTA, services by recovery agent to bank, service by way of what, my dear friends? Service by way of insurance agent to insurance company. Then services by whom? Sponsorship to given to any body, corporate or firm. Services by way of renting of a residential dwelling to a registered person, latest amendment. Service of residential dwelling renting to a registered person, that is also covered under RCM. Security service to a registered person, even that is covered in RCM. So there are all the various interesting points. Services by author to publisher, but author can choose to pay under forward charge. Yeah, my dear friends. Music composer to music company. So like this, various important points for there in RCM. And there's also one point called as legal services. Legal service given to a business entity, that is also covered under RCM. But we are not talking about service now, we're talking about goods first. And in our syllabus, we do not have list of goods covered under RCM. Yes, please, come on, see guys. What are the list of goods covered under RCM? What are the list of goods covered under RCM? We did not learn the list of the goods covered under RCM because it is not there in our syllabus. But let's understand what is the time of supply for goods covered under RCM. First point, date of receipt of goods. Date of what, my dear friends? Date of receipt of goods. Number two, date of payment. The date when you have received the goods. Number two is what, my dear friends? Date of payment. Date of payment is nothing but date when payment is entered in books, or payment is debited in bank. Obviously debited but not credited, because we are talking from receiver point of view. Date when payment is entered in the books, or date when payment is debited in bank, whichever is earlier. Getting my point, my dear friends? Chalo, what is the first one? Date of receipt of goods. Second one, date of payment. Third one, 31st day from date of invoice. These three dates, whichever is earlier, that will become time of supply. Online, some students are commenting about goods covered under RCM, cashew nut, silk yarn, raw cotton and all. They're all covered in RCM, but at cainter level, that goods list covered in RCM is not there in syllabus. So need not worry about it, my dear friends. We just have to understand what is the time of supply for goods covered under RCM. So what is time of supply? Date of receipt of goods, date of payment, 31st day from date of invoice, whichever is earlier. This is a case of time of supply for goods covered under RCM. Next point. Time of supply in case of vouchers, my dear friends. Voucher is nothing but a coupons or any kind of tokens. We know this vouchers, no? Amazon vouchers, Flipkart voucher, any kind of voucher. So in vouchers, they divide into two parts. Case number one, supply is identifiable. Case number two, supply is not identifiable. And what they told in the law is that if supply is identifiable, that means we know very clearly what you can take against that voucher. For example, I'm giving you a cake voucher. If I give you a cake voucher, against that voucher, you can only go and take a cake. But imagine if I give you one supermarket voucher, you can go to supermarket and buy any kind of item. That is a case where supply is not identifiable. But if I give you a cake voucher, you can only take a cake against that voucher. So supply is identifiable. Time of supply is date of issue of voucher. And if supply is not identifiable, time of supply will be date of redemption of voucher. So friends, I repeat again, my dear friends, if supply is identifiable, what is the answer? If supply is identifiable, time of supply will be date of issue of voucher. And if supply is not identifiable, time of supply will be date of redemption of voucher. You're getting my point, everybody? Wonderful. Next, finally, they also gave in the law what is the time of supply in case of addition in value by way of interest or late fee or penalty, which is charged by supplier from recipient. They told one line answer. Time of supply will be the date when addition in value is received. The date when addition in value is received. So whenever the amount is received, that day only will become time of supply. So for example, if Shiva Teja gave service to one client and I told the client, you pay me 1 lakh fees. And if you don't pay me 1 lakh fees within 10 days, I will take extra 10,000. So for this 10,000, time of supply is when the amount 10,000 amount is received. Because the date when addition in value by way of interest, late fee, penalty charged by supplier from recipient is received. So whenever it is received, that day will become time of supply. You're getting my point, friends? Done. So now, time of supply in case of services. First, let's complete RCM, only 1 minute discussion. Then we can discuss general rule, very important. RCM is very simple point, my dear friends. That is date of payment. Other one, 61st day from date of invoice. These 2 dates, whichever is earlier. What was the point in goods? In goods, they told what? In goods, the point was the date of receipt of goods, date of receipt of goods, date of payment, 31st day from date of invoice. These 3 dates, whichever is earlier. Come on, what are the 3 dates? Date of receipt of goods, date of payment, 31st day from date of invoice, whichever is earlier. But in case of service covered under RCM, it is date of payment or 61st day. Instead of 31st, it has become 61st date of payment or 61st day from date of invoice, whichever is earlier. So this is an interesting point given in time of supply for services covered under RCM. So last but not the least, the last point, my dear friends, that is time of supply for services, where I will talk about general rule, my dear friends. The general rule for services covered under normal route, that is in forward charge mechanism, that is something like this. Invoice issued within time. Invoice issued, what, my dear friends? Within time. Now, what is the meaning of this word called invoice issued within time? Generally, invoice must be issued within 30 days from completion of service, my dear friends. I repeat again, generally, invoice must be issued within 30 days from completion of service, or 45 days in case of banks and NBFC. So if invoice is issued within time, then they told in the law, date of invoice or date of payment, whichever is earlier. And date of payment is nothing but date when payment is entered in the books or date when payment is credited in the bank, whichever is earlier. Now don't ask me again, sir, sometime back you told payment is debited, now you're telling credited. Why, sir? Because that was RCM. Receiver point of view, bank account is debited, not bank account is credited. So now we are talking from supplier point of view, no? So what is time of supply? Date of invoice, date of payment, whichever is earlier. But if invoice is not issued within time, then date of completion of service or date of payment, whichever is earlier. So this is the general rule in case of services. One student is asking one doubt. DOP is same rule as goods DOP, sir? Yes, my dear friends. Date when payment is entered in books or debited in bank, whichever is earlier. If it is RCM. If it is not RCM, date when payment is entered in books or credited to bank, whichever is earlier. Imagine a chartered accountant has given service to client. Service is given on 10/6/22. And CA has given invoice on 4/7/22. Client has made payment on 5/8/22. So in this particular example, my dear friends, please tell me what will become the time of supply, my dear friends. Come on, what will become time of supply? Time of supply will definitely become what, my dear friends? Time of supply will definitely become 4/7/22 because invoice issued within 30 days. Date of invoice, date of payment, whichever is earlier. But second case you see here. If invoice is issued, let us say on 11/7/22, then time of supply will become 10th June 22. Third case. If payment is received on 5/5/22, then without any discussion, time of supply will become what, my dear friends? 5/5/22, because payment came in advance. Whenever advance has come, that date only become time of supply. So law is telling if you have got some advances, silently pay GST. No discussion on that. So this is the end of story and discussion about a brilliant topic called time of supply, which I have discussed along with the discussion on due date for issuance of invoice. And let me tell you one interesting point here. That is, in case of services, generally 30 days. But in case of bank NBFC, it is 45 days. And moreover, if there is continuous supply of service, that is for more than 3 months, the due date to issue the invoice is as under. If the due date for payment is ascertainable from the contract, then on or before due date of payment. And if the due date of payment is not ascertainable from the contract, on or before date of payment. And if it is linked to an event or milestone, on or before completion of event or milestone. That is the time limit for issuance of invoice. And in case of goods which are sent on approval basis, invoice must be issued when it is approved. Invoice must be issued when it is approved, or 6 months from the date of removal, whichever is earlier. So if the goods are sent to customer and if customer did not approve within 6 months, then supplier should issue invoice and pay GST to the government. No option is left to him. Student is asking, sir, explain once again case 2. My dear friend, please understand, if invoice is given on 11/7/22, that means what is the story? Invoice is given after 30 days. If invoice is given after 30 days, time of supply will become what? Date of completion of service or date of payment, whichever is earlier. That's the reason why answer is 10th of June. I hope you are clear, my dear friend. That's it. That's the end of story for this discussion on time of supply. I'm sure that everybody have got very good clarity of thought on time of supply, read with the concept of due date for issuance of tax invoice. Done. Let me proceed, my dear friends. Let's proceed, guys. Let's talk about one more small interesting topic, but comes in exam almost every time. That is called value of supply, which keeps coming in exam almost every time, my dear friends. Without any second thought, almost every time question keeps coming in the exam on the concept of value of supply, which is very simple discussion, guys, where we need to understand what all inclusions to be done and what all exclusions to be done to the transaction value which is given in the question. Clear, friends? And inclusions, there are only 5 points. Number 1, any tax, duty, cess, fee. Come, what is the line, my dear friends? Any tax, duty, cess, fee, except GST, TCS, under income tax, charged by supplier from recipient. So if in the question you find a point of customs duty or municipal tax, anything, then please add that. And all this adding we always do to the transaction value, because the fundamental point is very clear that these inclusions and exclusions we do only to transaction value. So value of supply will always mean transaction value. And to that transaction value only we are doing all these adjustments. So what is the first one? Any tax, duty, cess, fee except GST, TCS under income tax charged by supplier from recipient. Second one, supplier's obligation. I repeat again, my dear friends. Supplier's obligation in relation to supply met by recipient. That means something which supplier was supposed to incur, that is met by recipient. So what is the first point? Come on. Any tax, duty, cess, fee except GST, TCS and income tax charged by supplier from recipient. Second point is what? Come on. Supplier's obligation in relation to supply, but that is met by recipient. Supplier's obligation in relation to supply met by recipient. Third one, any incidental expenses, or anything charged by supplier from recipient. Come on, guys, what is the third point? Any incidental expenses. Repeat again, what is the third point? Come on. Any incidental expenses or anything charged by supplier from recipient. Fourth point, my dear friends, any interest, late fees, or penalty charged by supplier from recipient. Come on, guys, what is the language? Any interest, late fee, penalty charged by supplier from recipient, and this is generally assumed as inclusive of GST. That's when inclusive of GST means what? Imagine the question they gave 8,000 rupees as late fee. Then how will you calculate value? 8,000 into 100 divided by 118, assuming that 18% GST. This will do reverse calculation, my dear friends. I hope we are getting clarity on this point, everyone. So what the first point I wrote? Any tax, duty, cess, fee, except GST, TCS under income tax charged by supplier from recipient. Second one, supplier's obligation in relation to supply met by recipient. Third one, any incidental expenses or anything charged by supplier from recipient. Fourth one, any tax, any interest, late fees, penalty charged by supplier from recipient. Last point, any subsidy linked to price except subsidy from central government or state government. So any subsidy which is linked to the price, that is also added, my dear friends, except when the subsidy is coming from central government or state government. So if subsidy is coming from central government or state government, that is not included. But apart from that, rest all subsidies are included. Imagine for a second a small example. Shiva Teja is selling one laptop for 1 lakh rupees. Tata company told me, Shiva Teja, do one thing, sell it only for 80,000, balance 20,000, Tata will give you. Then still Shiva Teja should pay tax on 1 lakh only, because subsidy is coming from Tata. But imagine that is coming from central government, then GST will come only on 80,000. You're getting my point, everybody? So these are the 5 interesting points which are there in inclusions. That's it. Only 5 points. Just keep these 5 points in mind. Your job is over. So what are 5 points? First one, any tax, duty, cess, fee, except GST and also TCS under income tax charged by supplier from recipient. Second, supplier's obligation in relation to supply met by recipient. Third, any incidental expenses or anything charged by supplier from recipient. Fourth one, any interest, late fees or penalty charged by supplier from recipient. Last one, any subsidy linked to price except subsidy from central government or state government. Yeah, there are 2 doubts online. Number 1, sir, please explain second last point once more. Second last point is that any interest, late fee, penalty, my dear friends. That is, I give an example. If Shiva Teja is giving service to a client for 1 lakh rupees, I told my client, you have to make payment to me within 10 days. If you don't pay within 10 days, I will take extra 10,000. Now, on that extra 10,000 also GST will apply. But practically, on that 10,000, customer will not separately pay GST. So that 10,000 will assume as including GST. And we will do reverse working. That is nothing but 10,000 into 100 by 118. Next, one more doubt. Sir, why do obligation met by recipient has to be excluded? I never told to be excluded, my dear friend. I told it to add. Please see that. You have to understand one point here. See, if this point is not there, what will happen is that, see, for example, I told my client to do the audit, I want fees of 1 lakh. Okay? And to complete that audit, I have to incur some expenses. You're getting my point? And I told my client, do one thing, give me only 60,000, balance 40, directly pay to the vendor. Guys telling, don't play all these games. Please do pay GST only on 1 lakh, because who was supposed to incur that 40,000 is supplier. It is the supplier's obligation which is met by recipient. Supplier's obligation met by recipient is always included in the value of supply. If this is not there, people will try to play games and they split the payment and escape the GST. That government realized. That's why they told any supplier obligation met by recipient will be included in the value of GST. So in our exam, question only will tell whether it is supplier's obligation or not. Don't worry. I'm sure we are clear till this point, my dear friends. Done. That is all about inclusions to the transaction value. Now let me talk about what are the exclusions to transaction value. Only 2 points are there. Point number 1, discount recorded in the invoice. I repeat again, what is the first one? Discount recorded in the invoice. And in GST law, there is no difference between trade discount, cash discount, quantity discount, turnover discount, nothing like that. Discount is a discount. And with discount recorded in the invoice, directly reduce it. Second one, discount given after supply is made. Technically, we call it as post-supply discount. Discount given after supply is made based on agreement existing at the time of supply, and it is linked to invoice, and proportionate credit is reversed by recipient. Proportionate credit is reversed by recipient. Let me give a small example for this so that we'll exactly understand what am I trying to teach. Sir, listen for a second. There is a furniture company and there is a furniture dealer. Now, what has happened is that this furniture company has sent some stock of furniture for, let us say, 1 crore. And they clearly told that starting itself, there is an agreement stating that if this stock is not sold in 1 month, they will give 10% discount. Now tell me, is this discount given at the time of invoice itself? No. The discount is subject to condition that if this stock is not sold within 1 month, he'll give 10% discount. So this is technically called as post-supply discount. This discount can be reduced only if there is agreement at the time of supply and it is linked to the invoice. I repeat again. And it is what? Linked to the invoice and proportionate credit. And what, my dear friends? Proportionate credit is reversed by the recipient. Obviously, because recipient has already enjoyed full credit. Now, recipient has enjoyed full credit. He has to reverse the proportionate credit. No, sir. Because to that extent, supplier is reducing his tax. If supplier tax is coming down, recipient credit should come down. That's pure logical. If supplier tax is coming down, recipient credit should come down without any second thought. There's no doubt about this. No doubt about it. I hope we are getting clarity on this point, my dear friends. Very, very interesting point. So in exclusions, there are only 2 points, my dear friends. I repeat again, in exclusions, there are only 2 points. Point number 1, discount recorded in the invoice. Point number 2, discount given after supply is made based on agreement existing at the time of supply and proportionate credit is reversed by the recipient and that discount is linked to the invoice. Very interesting point, but please observe carefully when question is coming in the exam, whether there is agreement at the time of supply or not. If agreement is at the time of supply, only then this post-supply discount can be reduced. If not, post-supply discount cannot be reduced. Post-supply discount can be reduced only if there is an agreement existing at the time of supply and it is linked to the invoice and proportionate credit is reversed by the recipient. So that is the story of this interesting discussion called value of supply. So high probability that question will come in the exam. So friends, we discussed some major topics like basics, supply, time of supply, value of supply, we spoke about the time limit for issuance of tax invoice. I'm sure we are getting clarity on all these topics, my dear friends. So without any delay, let me move to discussion about one more very interesting and brilliant topic, that is your input tax credit, which I'm sure you know that it's very important. And every time the first question which comes is always set off of input tax with output tax. First of all, input tax credit is what we get on inward supplies, which we claim in GSTR 3B. And once we claim in GSTR 3B, that figure, once we claim in GSTR 3B, will come and sit in electronic credit ledger. Now, for example, ITC is 100 rupees. And assume for a second, output tax is 120. This 100 we will set off. But to set off, there are some rules. What is that rule? We'll talk. But the balance 20 is to be paid using some ledger called electronic cash ledger. Electronic, what ledger, my dear friends? Cash ledger. And some important point I'll tell you now, very clearly you listen, my dear friends. That is electronic credit ledger can be used only for payment of output tax. So, if we have to pay any tax under RCM, or if we have to pay any interest, or if we have to pay any late fee, or if we have to pay any penalty, we can pay all of this using cash ledger only. We cannot use credit ledger balance to pay tax under RCM, or to pay any interest, or to pay any late fees or any penalty. We cannot use electronic credit ledger. And cash ledger is nothing but like something like our Paytm balance, where we'll deposit money into the cash ledger and then use it. First, we'll create one challan. CPID is generated, common portal identification number, which is a 14-digit code, which is valid for a period of 15 days. Then we'll make the payment. Once payment is made, SIN is generated, challan identification number, which is an 18-digit code. And here, one important point to be noted, that is, this challan, what we generated first, is valid for 15 days for making the payment. And to make the payment, we have got various options like net banking, NEFT or RTGS, which is controlled by RBI. Third option is OTC, over the counter. And over the counter limit is only 10,000. So making more than 10,000, we can't use option of over the counter. Over the counter is nothing but taking print of challan, going to bank and physically making the payment. But that option is there only when the amount is less than 10,000. With more than 10,000, there is no option of over the counter, except in case of search, seizure, collection of recovery by the government. There they can take more than 10,000. Over the counter also. But general cases, over the counter limit is only 10,000. You are getting my points, my dear friends? Exactly. So now, first let us understand how do we set off this input tax credit. We have got input IGST. We have got input CGST. We have got input SGST. Input IGST is to be first used for output IGST. Input IGST is to be first used for output IGST. Then to be used for output CGST or SGST. In any order or any manner. When I say any order, that means you can use it for CGST first, SGST next. SGST first or CGST next. Any manner means you are using half or 60-40, 80-20. Any manner you can use it. But whereas input CGST is to be first used for output CGST, then for output IGST. But you can't use it for SGST, guys. SGST to be first used for output SGST. First, the same tax to be set off, guys. First, always same tax to be set off. Next for output, IGST. But here, there are two important points to be kept in mind while doing set off. Point number one. Point number one, my dear friends, that is input IGST to be first exhausted before using input CGST or SGST. That means what am I trying to tell you is that CGST credit and SGST credit, I repeat again, CGST credit and SGST credit can be utilized only after IGST credit is fully exhausted. First, completely use your IGST credit, then only touch your CGST, SGST credit. Next point. For payment of output IGST, input IGST is first used. Then input CGST is used. Only then input SGST to be used. I hope you are getting clarity on this point, my dear friends. So for payment of output IGST, first use input IGST, then only use input CGST, and only then use input SGST, guys. I'm sure we are getting clarity on this point, everyone. Guys, does this point make sense for all of us? Very good. Let's take one small example so that we get complete clarity of thought on this. Input IGST 3 lakh, SGST 1 lakh, CGST also of course 1 lakh. Output IGST 2 lakhs, CGST 1 lakh, or let us say CGST, SGST, let me take it as 3 lakh, 3 lakh. So that clarity will come. Clear, my dear friends? Go on. Let's take 3 columns like this in the exam. IGST, CGST, SGST. Tell me guys, what is the output? 2 lakh, 3 lakh, 3 lakh. Less input tax credit. Tell me guys, what is to be first used? Come on, reply. Which tax credit you will use first? Come on. Which tax you will use first is obviously IGST credit. How much we have got? 3 lakhs. Use 2 lakh here. And balance 1 lakh, you can use it for CGST, or you can use it for SGST, or you can equally divide between CGST and SGST also. In exam, please please check very clearly what they are asking. Because sometimes they ask, please ensure that IGST is paid minimum, or please ensure that SGST is paid minimum. If they say in the question SGST to be minimum, then use it for SGST only. If they say CGST minimum, use it for CGST only. You're getting my point? If not, you can use it for CGST or SGST in any order, any manner. CGST how much? 1 lakh. SGST how much? 1 lakh. And always keep in mind, we can never use CGST for SGST, SGST for CGST. This is nil. This is 1.5 lakh. This is also 1.5 lakh. That is the story of utilization of credit. And generally, the first question which is coming in the exam will be based on utilization of input tax credit only. That is very common that question only comes in the exam on how do we utilize the input tax credits. In this context, in exam, along with utilization of credit, they will also add some points related to block credits, where credit is not allowed. Let me simplify the task of block credit so that it will be very easy for you to keep in mind. That is, first one, motor vehicles where seating capacity does not exceed 13 passengers. So if seating capacity is not more than 13, credit is not allowed. But if seating capacity is more than 13, definitely credit is allowed. And if it is a motor vehicle for transportation of goods, again credit is allowed. And credit is not allowed even in case of aircraft and vessel. But if they are used for transportation of goods, again credit is allowed. Next, credit is not allowed even in case of food and beverages or outdoor catering. Credit is not allowed even in case of beauty treatment or health services. Credit is not allowed even in case of life insurance and health insurance. In exam attempt, question has come stock insurance. In case of stock insurance, definitely credit is allowed. Credit is not allowed only in case of life insurance and health insurance. But if employer has taken, I repeat again, if employer has taken life insurance or health insurance for employee, I repeat again, friends, if employer has taken life insurance or health insurance for employee and it is a statutory obligation, if it is what? Statutory obligation, then credit is allowed. If not, credit is not allowed. Next one, personal use, then also credit is not allowed. Next one, renting of such motor vehicle or vessel and aircraft. When I say such motor vehicle, nothing but motor vehicle where seating capacity does not exceed 13%. Next one, goods purchased from composition dealer. I am sure we know about composition dealer, my dear friends. Composition scheme is a scheme which is an optional scheme for those whose turnover does not exceed 1.5 crores. In some special state, 75 lakhs. And in manufacturer, the rate of GST is only 0.5% plus 0.5% of turnover. And for trader, it is 0.5% plus 0.5% of taxable turnover. And for restaurant and catering, it is 2.5% plus 2.5% of turnover. And finally, there is a composite scheme for service providers also, whose turnover does not exceed 50 lakh, where they are paid tax at the rate of 3% plus 3%. Composition persons are those persons who cannot take input tax credit, who cannot pass on input tax credits. They can never claim credit, they can never pass on the credit. Because first of all, they're paying tax at a very small percentage, which they have to pay from their own pocket. They cannot claim credit at all. Clear, my dear friends? Next point. Goods or services for construction of immovable property. In that cases also, my dear friends, credit is not allowed. So if we are buying cement, sand, steel and all, credit is not allowed, my dear friends. But if you are a construction builder who's constructing a commercial complex and he is buying cement, sand, steel, then he can take credit. But if Shiva Teja is constructing an office for my own use, and for that office, I've taken what, my dear friends? Cement, sand, steel construction, I can't take input tax credit. Finally, works contract service for construction of immovable property. For construction of what, my dear friends? Immovable property. And construction is nothing but repairs, renovation, improvement to the extent of capitalization. That means only which are capital in nature. If it is revenue in nature, then credit is allowed. If it is capital in nature, then only credit is not allowed. That's why in simple terms, sometimes we say, if you charge off to P&L because it's revenue in nature, then credit is allowed. And immovable property does not include plant and machinery. So if it is plant and machinery, then again, my dear friends, credit is allowed. But plant and machinery does not include. Does not include means credit is not allowed. Land, building, civil structures. Number 2, telecommunication towers. Even for telecommunication towers, we can't take input tax credits. Number 3, pipelines laid outside the factory premises. Here also, my dear friends, input tax credit is not allowed. Because plant and machinery does not include these things. Then what is covered in plant and machinery? Any equipment, apparatus or machine which is fixed to the earth, either by foundation or structural support, and includes that foundation and structural support. Example, generator, we create one base and on that base, we put the generator. The generator will come under definition of plant and machinery. Then credit is definitely allowed. Clear my difference? So there are the various cases where credit is blocked, which are given by section 17 subsection 5 of CGST Act. So in first question in the exam, generally question comes where they will ask a point where they'll give input credit, they'll give output tax. We need to set off that credit. That's very important, guys. And in sometimes in the question, they'll also cover some point related to block credit. You should know very clearly where credit is allowed, where credit is not allowed. Next, my dear friends, in order to claim input tax credit, there are some conditions to be satisfied. Very important, my dear friends. That is, recipient must have a tax-paying document. Number 2, recipient must receive goods or services or both. Number 3, supplier must pay tax to government. That means recipient can claim credit. I repeat once again, my dear friends, recipient can claim credit only if supplier has paid tax to government. If not, recipient cannot claim credit, my dear friends. And practically, recipient can claim credit only if the credit is reflecting in GSTR 2B. And the credit will reflect in GSTR 2B only if supplier has filed GSTR 1 within the due date. So if supplier has not filed GSTR 1, I repeat once again, friends, if supplier has not filed GSTR 1 within the due date, then recipient cannot claim input tax credit. Recipient can claim input tax credit only if supplier has filed GSTR 1 within the due date. Finally, last condition, recipient must file return under section GSTR, under section 39, but it is GSTR 3B. Only then recipient can claim input tax credits. So these are the conditions to be satisfied for the recipient in order to claim input tax credits. But imagine a case where recipient has satisfied conditions, but in, let us say, for the month of June 2023, he missed out claiming credits. Lawyer student, don't worry, claim the credit in July. July also forgot, claim in September. September also forgot, October. October also forgot, November. You have maximum time till 30th November 24, because this transaction pertains to 23-24. This is one latest amendment which is related to credit note also, and also related to maximum time limit to claim input tax credit, which is nothing but 30th November following the end of financial year, or date of filing annual return. Date of filing what, my dear friends? Annual return, whichever is earlier. So in exam, a small question can come for 2 marks where they will ask, what is the maximum time limit within which input tax credit is to be claimed? That is nothing but 30th November following the end of financial year to which invoice pertains, or the actual date of filing annual return. I repeat again, 30th November following the end of financial year to which invoice pertains, or the actual date of filing annual return, whichever is earlier. So that is the maximum time limit within which credit can be claimed by the recipient. Very, very important latest amendment, my dear friends. Now I have a question. Listen, my dear friends. Shiva Teja, let us say I purchase one laptop for 1 lakh plus GST at 18%. This GST I happily claimed input tax credit. But what has happened is, after 10 months, I sold. Then what will happen? Law told one important point, please pay higher of the following. Please pay what? Higher of the following. They never told lower. Their ego is hurted because first of all, they gave input tax credit because you use it for business. After 10 months, what you have done? You sold it. Huh? You sold. Law is telling. I will tell what you have to pay now. Please pay higher of the following two. Higher of the following two. Clear, my dear friends? First point. ITC minus 5% per quarter or part thereof. Per quarter or part thereof. ITC minus 5% per quarter or part thereof. Or number two, tax on transaction value. Means which value you sold. Which value you have sold. These two, whichever is higher, that amount is required to be paid to the government. You're getting my point, my dear friends? What is the telling the law? Please pay higher of the following two. What the first one? ITC minus what? 5% per quarter or part thereof, or tax on transaction value, whichever is earlier. I hope we are getting clarity on this point, my dear friends. I told in the law, if you have claimed input tax rate and enjoyed, after that you sold the plant and machinery or the capital good. What did they say in the law, my dear friends? You are required to pay here the following two. First one, ITC minus 5% per quarter or part thereof, or tax on transaction value. These two, whichever is higher, is required to be paid. Clear, my dear friends? So with this, my dear friends, we are done with major important points in your beautiful topic called input tax credit, where question keeps coming in the exam almost every time, my dear friends. I hope we are getting clarity on this point, everyone. Guys, does this point make sense for everybody, sir? So with this, my dear friends, I spoke with you lot of major important points with respect to our syllabus and with respect to major topics. We have done some holistic revision, my dear friends. And with respect to exemptions, I'm sure you guys know that there are a lot of interesting amendments which have been brought in. We have separately posted an amendment lecture on the Indigo Learn YouTube channel. If you're already good with amendments, really good. If you are not yet done with the amendments, please watch out that video for amendments so that you get some clarity of thought. Because small points like service by SEBI, service by IRDA, all these statutory bodies are also made taxable now. Service by RDA, service by RBI is also taxable. One more example, service by cord blood banks for preservation of stem cells. This was exempt before, but now it became taxable. Service by way of fumigation in warehouse. It was exempt before, but now it became taxable. Next, hotel less than 1,000 rupees. It was exempt per day, but now that also became taxable. Like this, lot of interesting amendments have come in exemptions. And all these amendments we have recorded in the Indigo Learn YouTube channel, and we also posted the amendments material what we prepared in the channel itself. Don't worry. Clear, my dear friends? Yeah. Some student is asking doubt. Sir, why is that he has to pay higher of the following two? You have to understand the government logic. That is, government gave credit because you have to use that asset for your business. But since you are selling in between, law is telling we want you to pay higher of the following two. That is, at what value you sold into GST rate, or ITC what you enjoyed minus 5% per quarter of part thereof. 5% logic has come because GST law presumes and believes that useful life of any capital good is always 5 years. 5% per quarter, 4 quarters 20%, 5 years 100%. That's the logic what they have drawn for that 5% per quarter or part thereof. Clear? Next. Apart from exemptions, we have got one small topic called e-way bill, guys, which is mandatory only when there is a movement of goods of value exceeding 50,000. And if you have not filed returns for more than 2 months, the facility of generation of e-way bill will be blocked. But that too, it is blocked only for outward supply. But inward supply is still possible. One latest amendment, high probability question may come, because facility of e-way bill is blocked for only for outward movement, but inward movement is still possible, even though e-way bill generation is blocked. And already, my dear friends, tax invoice story, I discussed with you what is the due date for issuance of tax invoice. And with respect to credit note and debit note, I'm sure we all know the concept about this, that credit note, debit note, both are given by supplier only. Credit note is a document issued by the supplier for the purpose of reducing the tax. Whereas debit note is a document issued by the supplier for the purpose of increasing the tax. And if there is a credit note which is given by the supplier, the details of the credit note is to be required to be shown in the return. And the maximum time limit to show that is nothing but 30th November following the end of financial year or a date of filing annual return, whichever is earlier. In exam, students are doing silly mistake that credit note is given by supplier, debit note is given by recipient. Never do that small silly mistakes. Credit note or debit note, both are given by supplier only. Credit note is given to reduce the tax. Debit note is given to increase the tax. But both are given by supplier only. You're getting my point, my dear friends? Everybody serve. So these are the interesting elements of our syllabus, what we have got of CA inter GST level and registration topic. I'm sure you guys know about the concept of 40 lakh, 20 lakh, 10 lakh guys registration limit. And of course, do keep in mind what are all the cases where registration is mandatory, even though aggregate turnover does not exceed threshold limit. Something like CTP, NRTP, person supplying goods through e-commerce operator required to collect tax at source. So in all these cases, my dear friends, please do keep in mind. Yeah. And we know the story of 10 lakhs, that is Manipur, Mizoram, Nagaland, Tripura, where the limit is only 10 lakhs. And that limit is all based on aggregate turnover. Aggregate turnover covers all taxable supplies, exempt supplies, interstate supplies, and exports on all India basis under same ban, but does not include value of inward supplies on which recipient is liable to pay tax under RCM. This definition is given by section 2 clause 6, an important definition of aggregate turnover. High possibility that question will come in the exam. Make sense, guys? So friends, these are the various interesting points and the major important topics of our syllabus, which we wanted to spend some good time so that we get complete clarity of thought and you guys are geared up with your preparation and performing really well for your examination, my dear friends. Everybody, I'm sure that makes sense for all of us. Yes, guys. Wonderful, my dear friends. So with this discussion, I'll complete our discussion on revision strategy and the major important topics, rapid fire revision with respect to our CA inter GST for your examination, guys. And the story is not done yet. I wish that you guys will prepare really well for the examination. And any doubts, anytime, don't hesitate. Feel free to post your query on the Indigo Learn YouTube channel. We'll be more than happy to reply to your query, my dear friends. And will definitely reply in the forums. So till the end of your journey, till the end of your examination, except the time of exam, post your doubt anytime. We'll be more than happy to reply to your query, guys. So before I complete, 1 to more doubts in the chat box, I'll reply that and complete this. Supplier not filed the return and we want to take ITC. 5% is correct or not. That 5% amendment is already over, my dear friends. What we can take is only how much ever is coming in 2B. So that means in 2B, if 10 lakhs is coming, we can take only 10 lakhs. We cannot take that 5% also. That amendment is done already. So recipient can claim credit only to the extent that is reflecting in GSTR 2B. And in GSTR 2B, what will reflect is only what is filed by supplier in GSTR 1 within the due date. One more doubt. Sir, in practical, credit note, debit note issued by both supplier and recipient. That is only for practical purpose because in accounting terminology, for sales return, supplier gives credit note, purchase returns, recipient will give debit note. That is only in an accounting perspective. But from a GST standpoint, debit note meaning is totally different. Debit note, credit note, both are given by supplier only. Credit note is given for reducing the tax. Debit note is given for increasing the tax, and both are given by supplier only from a GST perspective. Thank you so very much, my dear friends. With this, we'll complete our discussion, and wholeheartedly, I wish you all the very best and I wish you all success to perform really well in the exam and come out with flying colors. Thank you so much. Stay tuned to our channel. Stay tuned to our channel for more updates and more sessions. And any doubts, feel free to post on our forum queries. we'll be more than happy to reply to all your queries, guys. Thank you so much. Shiva Teja signing off. Take care. Bye-bye.